Well, you gotta be flipping my flapjacks, folks. This week, I am so dang excited about. There's so much going on this week. So many things that I'm genuinely excited about this week that I want to take you through. I want to show you. I want to talk about some opportunities in the market I see. I want to talk about what I'm paying attention to this week, why I'm specifically paying attention to these things. I am genuinely very excited about this week. I mean, like this is the most excited I've been for a week in quite some time, to be honest. So, yeah, a lot to get into in today's video. Thank you, everybody. Subscribe to the channel. I appreciate you all being here as always. It's going to be a busy week, okay? So, first thing I'm excited about this week is what happens with Palantir stock. This stock in the past 5 days is up about 25%. Yes, you heard me right. It's up about 25% in the past 5 trading days. And so I'm just really excited to see what happens here with Palantir now that it's had this. That's a pretty gigantic move in a matter of 5 trading days, 25%. I'm excited to see what happens here, okay? Now, a week like this is very important because what should happen with Palantir stock this week is Palantir stock should take what's called a breather, meaning essentially that stock should pull back at least a little bit this week. I'm talking a 5 to 10% type pullback this week. That's what should happen with that stock. With that being said, if this stock has another pretty decent upside week, meaning a 5 to 10% type move again or bigger, what that will tell me is that this stock is on its way to 1750, likely much quicker than I think a lot of folks are kind of expecting here, okay? And so this is actually a big week for the stock price of Palantir. Now, like I said, I'm expecting a pullback week. I think that would be natural. You don't usually get stocks just go up and up and up in a straight line unless it's Nvidia. That's not usually what happens. So I'm expecting a pullback. But if the stock shows a bunch of momentum this week, we're off to the races, baby. We're 1750 before you know it, if that scenario plays out. So really important one to just kind of keep an eye on, okay? PayPal. Now, this is a past month for PayPal. The stock's down almost 18%. This is an important week for PayPal. This stock has got to start coming back this week, okay? It's got to start showing some momentum. Now, am I going to be buying PayPal stock this week personally? And the answer to that is yes. It's almost, I would say, 98% guaranteed that I am a buyer of PayPal this specific week. How big of a buyer? We'll see. Will I be playing any call options 2025? Man, calls aren't really my thing, but, you know, it usually doesn't work out well for me, so I might just might stick to the stock. We'll see what happens, okay? But nonetheless, yes, PayPal is an absolutely insane deal. I've looked at this one across the board. I've looked at every single risk factor. I've looked at risk factors that aren't even there. I've looked at the valuation a million times. I've looked at the income statements, the balance sheets. I've gone through it all a million times. And I can tell you every single time, it's a deal. It's a steal deal. It's stealing money. I've looked at it from every angle. I've thought about competition. I've thought about, the marketplace. I've thought about everything they're up to. And there's just no doubt, like it's a steal deal in my opinion. So we'll see, what transpires long term there. But that's my opinion. I'll likely be a buyer of it. But it's an important week for PayPal. This stock has to, start coming back to life. It's got to be some buying action that comes in. Okay, Monday after the bell. This one, I'm not even interested in Zoom stock in terms of like thinking about buying it. I'm just genuinely interested to see what numbers they put up, because the deal with Zoom is this is a company that has been in an awful place, okay? And obviously with everybody going back to the office, like what happens with Zoom numbers? And this is a company that's expected to still grow revenues in the quarter. And I'm just thinking to myself, like, is that even realistic? Are they even actually going to grow? They're expected to grow less than 1%. But I'm wondering, like, is this company actually going to grow? Or are their revenues about to start declining here? So anyways, it doesn't matter what they report. I'm not buying the stock. It's just I'm genuinely interested to see what the numbers are there, okay? Lowe's. This one matters. This is one of those stocks I keep an eye on for the overall economy and see what's going on in the U.S. economy, okay? This, Home Depot, the rail operators, obviously, companies like UPS, FedEx, I always think these are all good barometers for knowing what's going on in the overall economy, okay? Lowe's is reporting Tuesday before the bell. Now, we know Home Depot reported not very good numbers, right? And revenues that are in decline. Now, at this point in time, Lowe's is expected to have even a bigger decline. Their revenues are expected to go down 8.5% here in regards to this one. So I think it's just an important company overall to pay attention to. Keep an eye on it. They're going to tell you ultimately, when companies like Home Depot and Lowe's are doing really good, the economy in general in the United States of America is doing really good. When companies like Home Depot and Lowe's are reporting revenues that are going down, that generally means you're in a recessionary scenario. Like just look at it throughout history. I mean, almost every single time Home Depot and Lowe's have revenues that are going down, especially if it's quarter after quarter after quarter, that generally means you're in a bad economy for the U.S. economy. So I think it's one to just keep an eye on, pay attention to there. Dick's Sporting Goods is reporting Tuesday also before the bell. This one I'm keeping an eye on. Why? Because of Foot Locker, okay? Foot Locker reported those really bad earnings, and Dick's is seen as one that kind of, how can you say it? Kind of moves with Foot Locker. And I believe even on the Foot Locker results, when that stock was down 27%, look at what Dick's did, right? Dick's was down almost 7% that day, strictly because of what Foot Locker reported. So they're like, oh, Foot Locker reported bad earnings, so is Dick's going to report bad earnings. Now, here's where things get really intriguing in regards to this whole storyline, is Dick's is actually expected to grow, right? Whereas Foot Locker's revenues were down about 11%, Dick's is expected to grow. Now, the good thing for Dick's Sporting Goods versus a Foot Locker is Foot Locker only is like you're going there to buy, athletic shorts or a shirt or ultimately shoes, right? Whereas Dick's Sporting Goods sells all types of sporting related things, way beyond just clothing, right? And so, nonetheless, with sports, being fully ramped back up, it's been a busy spring in regards to the sports season. That should at least help Dick's offset some of that. But something I saw that might be a little troubling for Dick's here is this. I went to their website, and what do they greet you with right off the bat? 50% off Memorial Day deals right off the bat, or as soon as you go to the website. When these companies are getting so promotional like that, and they're throwing stuff right on the front page, 50% off, right? Generally, it means that they're in a tougher environment, and they feel like they have to do these big deals to get sales. Okay, it's usually not the best sign. That's the bottom line. It's usually not the best sign when these companies are doing things like that. So it is just something to keep in mind there. That being that right when you open the website, you greeted with that. A little troubling there. Okay, AutoZone. So AutoZone's reporting Tuesday before the bell. Now, AutoZone's an interesting one because obviously they're benefiting still massively from like the used car auto market, right? Being and people just continuing to drive old internal combustion engine cars. Where right now it's an interesting time for AutoZone. This stock has performed amazing. And by the way, and this is actually a stock my dad told me about probably 10, 12 years ago. He's not like a stock market investor or anything like that, but he's always just paid attention to a couple things, and he always said, AutoZone, great stock to buy. And man, I should have bought it. I mean, it's performed amazing, right? Up 600+% over the past decade or so. But the one thing I'll say about AutoZone is this decade we're going through right now, this is the glory days of AutoZone. And they're going to have to completely reinvent their business model, to be quite frank, okay? They've done so well under the internal combustion engine, obviously, days, right? And they're going to continue to thrive over this entire decade because, internal combustion engine vehicles aren't going anywhere over this next 8 to 10 years. Obviously, EVs are going to continue to take more and more market share, but the used auto market is still going to be massive for internal combustion engines. But I would say this decade is very important that AutoZone focuses on what's the next thing. But I can tell you, when everybody's driving EVs around, that's not going to be very good for AutoZone's business. So they're going to be at an interesting inflection. They're going to need to take every profit they have possible and reinvent this business so they can last past this era we're in right now. Because otherwise, people are just going to be looking back and like, well, that was the glory days of AutoZone. No different than people look back at, the 90s as kind of the glory days of department stores, right? You got to reinvent yourself. And I got to give my dad, props on this because, like I said, he never got into stocks, but I remember this one in high school. He was specifically about this Middleby company. Oh, they sell this, kitchen equipment and whatnot. And I was looking at this stock, and since the days I was in high school, man, the stock's up almost 2,000%. Holy smokers, man! He should have got into stocks. That's all I got to say about that, man. I think he could have done decent for himself. Okay, so the only two stocks I really remember him ever bringing to me was AutoZone and Middleby, and both of them have done pretty well over the years, nonetheless. Okay, Intuit is reporting Tuesday after the bell. Intuit, known for obviously their TurboTax products, QuickBooks, and many other various companies they own. But in regards to this one, this is a weird situation. I was actually looking at their numbers, and something doesn't look right here, okay? So expect to have 8% revenue growth in this current quarter, and they usually always have a massive, kind of April quarter there because of the TurboTax business, right? And the tax-related business in general. But I was looking, and something doesn't seem right. They're expected to only have 1% revenue growth next quarter. Doesn't look right, man. I wouldn't be surprised if Intuit smashes that and maybe the stock flies on that. I mean, it just doesn't seem right. It doesn't seem right at all, to be honest, okay? Now, the company I'm most excited for Tuesday after the bell is Toll Brothers. Why am I so excited to see Toll Brothers numbers? The reason being is this is going to tell you what's going on in the luxury home market. Is that market getting any better, right? We know Toll Brothers sells by far and away the most expensive homes of any of the public home builders, right? Which almost all the big home builders in the United States of America are public companies. And the great thing about that is we can see all their numbers. But Toll Brothers, I'm excited to see what's going on with their contracts and their backlog. Is there any life to this real estate market on the higher end or not? Okay. We know in their last quarter, contracts were down 50% year over year, and their backlog down 30+%, right? So their backlog's been shrinking massively. Their contract's been shrinking massively. Ultimately, for a home builder, this spells doom over time. Now, Toll Brothers is at almost an all-time high, and many of these home building stocks are. And the belief is all these companies are going to make a lot of money off all these homes that they've sold and are going to deliver over this next year, and the backlog will take care of itself. Well, I can tell you, this next 2 to 3 quarters is everything for these home builders, because if their backlogs don't turn around, then their numbers are going to start reporting in 24 and 25 are going to be really, really bad. And so this is extremely important time over this next few quarters for companies like Toll Brothers. And so I'm just genuinely really excited to see what is going on there, man, because it's been really bad and they need this to turn around. You know, everybody's turning a blind eye to this right now and acting like it doesn't matter. But I can tell you, run these numbers over a few more quarters and tell me what their backlog starts looking like, right? This is a very important time for a company like Toll Brothers. Nvidia, and by the way, this is also going to tell me a little bit about RH's business, which we'll talk about a little later in this video because they're actually reporting this week as well. Nvidia, so they're reporting Wednesday after the bell. Look at the year to date on this baby, okay? It's up 118% year to date. Obviously, one of the hottest stocks in the stock market. Now, what everybody's going to be paying attention to for Nvidia is one thing, okay? It's not going to be actually their revenue and EPS. That's all cool. Guidance is going to be important, but there's actually going to be one thing that's overwhelmingly more important than all of that right here. And what it's going to be is what is going on with their AI chips. How many of these are they selling? How fast is this business going to ramp? This is why this stock has made a 100% plus move this year. If they had nothing to do with AI chips, believe me, the stock wouldn't have made this 100% plus move. But everybody's extremely excited about this. Why are they extremely excited about this? Because NVIDIA, it looks like for NVIDIA's AI chips, it looks like NVIDIA is going to get between $10,000 and $30,000 per AI chip, okay? And when you talk about these big players in regards to the AI market, I mean, they're going to have to put in orders of thousands, tens of thousands, maybe even hundreds of thousands of these chips. Now, go ahead and run the math on what that is when you're selling these chips for $10,000 to $30,000 each. And NVIDIA is going to be able to likely get these sorts of prices for at least the next, I would say, 12 to 36 months before they face more and more competition from AMD and others. And so they've got this like little time period in front of themselves where they're just going to be able to absolutely make a fortune. But the question is, how much money are we really talking? Because that's what's important for the stock price, right? This stock has moved because of this. But what's really going on here, right? And I just took this article because, in the aftermarket, right, some folks are selling some of these chips for $40,000 plus. Absolutely insane. So I think that one's really important to pay attention to. Am I interested in buying NVIDIA stock? Not right now. I've owned it in the past. I could own it in the future, but not right now. I'm not interested in buying that stock. Snowflake. So, okay. This obviously matters, okay? Why does this matter? Well, Snowflake gets grouped in with Palantir. I'm not saying that's right, but it is the way it is, okay? It gets grouped in with Palantir stock for whatever reason, okay? A lot of people have a lot of trouble finding a direct comp for Palantir, so some people like to throw it in the category of Snowflake, which isn't really right in my personal opinion, but some people do it, okay? And so ultimately, a stock like Snowflake could move Palantir positively or negatively, depending upon many various things. Now, with Snowflake, their growth is decelerating pretty rapidly. That's still amazing. If they can put up 40% plus growth, that's big for this one. Okay, if they don't put up that number, the stock's crashing, because at the end of the day, this stock's completely valued on their net dollar retention and that revenue growth. That's everything for this company right now. Now, what keeps me out of a stock like Snowflake? Why can't I buy the stock? Well, I can't buy the stock because, they've been profitable for a bit now. But, you even look at like next year, for instance, next year's numbers, right? And based upon that, you're paying like a 176 forward PE ratio for next year's numbers. I mean, for a company that's been profitable for a bit, I'm not willing to pay those sorts of prices. Okay, I'm just not, and that's kind of where I'm at with Snowflake. And so it doesn't mean you can't make money in this stock. It's just like there's too many other, in my opinion, easy money stocks for this next 12 to 24 to 36 months that I'm looking at and investing in, that I'm like, do I want to take a risk on a Snowflake at 176 P ratio based upon next year's numbers? Like, I'm okay with that, okay? I'm okay. There's much better opportunities, in my opinion, out there in the market, but I will be paying attention to them. Elf on a Shelf is reporting Wednesday after the bell. Obviously, cosmetics company, beauty-related company, is treated us tremendously well, right? And I regret every share I've ever sold of Elf stock, because the percentage gain on this one has been astronomical, right? 1,100% plus. It's done me better than even Tesla stock has done me, right? So it's been great. They're reporting Wednesday after the bell. And in regards to Elf, I got to say this. The setup is beautiful. It's absolutely beautiful with Elf, okay? This is a great setup. This is a past month for the stock, and it's kind of just been moving down. It's down about 3%. I love a setup like this, man. I don't like to see my stocks going into earnings high flying, because then you need to report such ridiculous numbers to even get that stock to keep any momentum. I like it when a company like Elf is going to those earnings kind of in a weaker place in terms of stock price, at least, right? And it's not really showing any strength. So, in regards to Elf, right, here's my opinion on the numbers. So revenue, I think that's going to be really tough to beat. Analysts are expecting them to have almost 50% revenue growth. I think that's tough to beat. If they beat that, my gosh, they deserve, some sort of trophy or something like that, because that's insane if they beat that, okay? I am expecting them to easily beat earnings per share. I don't see how they don't destroy earnings per share, to be quite frank. I mean, I would be disappointed if they don't come in with at least 25 cents of EPS, or maybe even 30 cents. They should absolutely wreck that number. But I am concerned about this here. Okay, that's a tough number to beat there. Best Buy is reporting Thursday before the bell. Best Buy, I like to keep an eye on for two reasons. One is it's another one of those companies, kind of like a Home Depot and Lowe's, just to a little lower extent, telling you kind of how the economy is doing. I mean, when the economy is in a really bad place, Best Buy numbers are horrible. Look at Best Buy numbers, 2008, 2009, 2010, 2011, bad. And then as the economy started to come back to life, Best Buy numbers came back to life, right? And you look at, obviously, Best Buy in 2021, and, stock's doing great, company's doing great, and now it's not doing so well, right? They expect to have revenues go down double-digit percentage, over 10%. We'll see what happens there. But the second reason why this is an important stock for me personally to pay attention to is because of another stock I own, and that is Corsair Gaming. Corsair Gaming has been doing actually really well in terms of stock price. It's up about 42% year to date. This stock bottomed around summertime, fall time of 2022, and ever since then it's just been up and away. This stock bottomed, it was like 10 something dollars a share, and it's almost doubled up from that bottom now at this point in time, right? So Corsair, really important. Best Buy is really important to Corsair, obviously through the Corsair brand, the Elgato brand there. And if Best Buy numbers are really awful and their guidance is really awful, it could actually put a damper on Corsair and actually bring the stock price down next week, depending upon what happens with those numbers Thursday before the bell. Ulta, and sometimes you can actually, sometimes you can actually, like, if you really want to get in the activity and you really need that activity, you can play indirect plays like this. So basically meaning, if you're expecting Best Buy to come in with really horrible numbers, you think the stock's going to tank, but you don't really want to play Best Buy, you could play something like puts on Corsair. vice versa, if you expect Best Buy to have really good guidance, to say really good things, you could play like, short-term calls on Corsair, because usually the discrepancy in terms of how much you're expected to pay for those options is really low on an indirect stock, because people aren't expecting Corsair to move huge this week because they're not reporting earnings. They've already reported earnings, right? But a lot of people are expecting, obviously, Best Buy to move huge. So what you have to pay in terms of the premium for those options is obviously a pretty huge amount compared to something like a Corsair, which, you might have to pay a 2%, 3% type premium on out of the money options there. So just something to keep in mind if you really feel like you need to get in some activity or something like that in the short term, which I don't suggest. That's usually not a good thing. Just focus on long-term opportunities out there, okay? Some people, got to keep it interesting, right? Ulta Beauty is reporting Thursday after the bell. Really important one, obviously. I own Honest. I own Elf, right? Two companies that sell into Ulta. Honest is kind of new to Ulta. Elf's a decent-sized player in Ulta overall, so it's an important company for me to pay attention to. The interesting thing about Ulta, this stock's performed better than Amazon, Netflix, Meta, and many of the other most popular, biggest companies in the world over the past 5 years. That's crazy. Such a simple business model. I mean, they sell makeup, beauty products. And, the fact that stock has outperformed some of these other crazy famous companies just shows you there's opportunities all over the market. And you just got to look for those opportunities. It doesn't have to always be the craziest business idea or something like that. So I'm going to keep an eye on there. Okay. By the way, if you're wondering, the current CEO of Foot Locker, who's been there for, a few months now at this point in time, she actually used to be the CEO of Ulta from about 2013-ish. Through about 2021. So that's one of the other things that gives me a lot of confidence in Foot Locker over time is, I watched what Mary Dillon did at Ulta, and it was just amazing. And, hopefully she can work some of that magic on Foot Locker over this next few years. RH, I am so excited for this one. They're reporting Thursday after the bell. Now, this stock has been in no man's land for a year. I'll be honest with you, okay? Which conference call do I look more forward to than any conference call in the entire stock market for any company I either own or don't own? The answer to that is RH. There's no conference call I like better than listening to that one. The gentleman, Gary Friedman, who runs that company, he took the old place of Steve Wynn. Steve Wynn, I used to love listening, even when I didn't own Wynn stock back in the day, I used to love listening to the Steve Wynn conference calls. I felt like he had such great thoughts, such great, imaginations on what he could do and what he could accomplish with his business and luxury and like what it meant to be a high-end marketer and all those sorts of things, right? And just I see a lot of those same traits in Gary Friedman. So this is my favorite company to listen to their conference call. Even though now I'm finally investing in the company, but I have like a very small amount of money, and I think I have like maybe $11,000 or $12,000 in the stock, right? It's still like, I just love listening to this company. Now, in regards to this, right, it's in no man's land, and I wouldn't be surprised if it stays in no man's land for this entire year. What do I mean by that? I wouldn't be surprised if the stock stays between $200 and $300 for this entire year. And it's going to move down, it's going to look like that in the world, then it's going to move up, it's going to look like everything's getting better. But I don't know if we're in a time period where we're going to get any sort of clear confirmation about the luxury real estate market. The good news is it can't get much worse than it's already been. The bad news is I don't see the luxury housing market getting necessarily better right now. I think we're still probably 6 to 12 months, potential 18 months, but I think we're probably more 6 to 12 months before the luxury home market really starts to pick up in terms of sales volume, things like that. So I think the stock's going to likely stay in no man's land. And for somebody like myself that really wants to build out this position over this next 12 months, I think I'm going to have a tremendous opportunity to, over this next 12 months, to continue to build the stock and buy shares under $300 a share. And I hope the stock tanks. I hope their earnings are bad. I hope they have to pull down guidance even more. That's my ideal scenario, because I really like the company. I like the vision. I like, obviously, the CEO. I like everything they've accomplished. But I really want to build that one into a much bigger position. So my hope is it goes down. Next thing you know, it's 220. I want it to break through its lows. So it need to go down to 220 plus and break through any sort of past lows. And then, hopefully get down to the $200 level there. This is a full earnings calendar this week. If you want to pause the video and check it out, there you got it, man. You can pause the video right now and check out all the earnings. It's a busy, busy week out there. I appreciate everybody joining me as always. For anybody that makes over $100,000 a year, I put together a free workshop last week for you guys. They'll be pinned comment if you want access to that. It's a free workshop. Talks about investing in 2023 and beyond. And I think that should help you out immensely if you're somebody that makes over $100,000 a year. And for the people that make less than $100,000 a year, I'm going to put together a free workshop for you guys this week that will go into details on kind of, from that kind of income standpoint, right? So appreciate everybody joining me as always. Much love, folks. It's going to be a fun one. And I'll keep you in tuned with everything going on this week, and have a great day.